is 5 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Australia calls for tougher gun laws after gunmen opened fire and killed at least 15 people at a Jewish community gathering to celebrate Hanukkah. Ukraine and the U.S. are set to hold a second day of peace talks in Berlin to end the war with Russia, and a busy week ahead. Delayed November jobs data and rate decisions from the ECB, the BOJ, and the BOE all on deck. Let's get a look at what's going on in futures here in the U.S. after a brutal close on Friday. S&P futures recovering a little bit of that, up about a 0.5% right now. NASDAQ futures also gaining 0.5%, and small caps gaining a little bit more. In terms of some of the stocks we want to watch this morning, let's get out to Valerie Teitel in London. She's got your details. Valerie?
Good morning, Matt. Let's start with a check on the main the stock that led some of those declines in Friday's session. NVIDIA climbing back some of those losses from Friday, is up 1.2%. NVIDIA was one of the main drags on the NASDAQ on Friday after Broadcom. It was down some 3%, so still down on a two-day basis, but it does look like the tech trade is on a firmer footing today. Speaking of the tech trade, let's have a check on Intel. On Friday, it was reported that they are nearing a deal to acquire Samba Nova, an AI chip startup, for $1.6 billion. An acquisition like this would really help Intel widen its AI product offerings. We're seeing shares of Intel up over 1% in pre-market trade. Lastly, keeping with the tech theme, but in a different manner, iRobot. This is the company that is the maker of Roomba. The robot vacuum is going bust, filed for Chapter 11 bankruptcy, and will be taken over by its main Chinese supplier. iRobot has really struggled in the post-COVID era, battling not only tougher competitions, but still issues with supply chains. We're seeing shares of iRobot down 83% after it files for Chapter 11 bankruptcy. Matt?
All right, Valerie, thanks very much for that. Coming up this hour, we're going to speak with Jane Foley of Rabobank on the foreign exchange market, and don't miss our exclusive conversation with the EU Trade Commissioner on the negotiations with the U.S. Now let's get, though, to our top story. Australia experienced the deadliest terrorist attack in its history on Sunday when two gunmen opened fire on a celebration of the first day of Hanukkah at Bondi Beach in Sydney. The Australian Prime Minister spoke earlier.
What we saw yesterday was an act of pure evil, an act of anti-Semitism, an act of terrorism on our shores in an iconic Australian location, Bondi Beach, that is associated with joy, associated with families gathering, associated with celebrations. And it is forever tarnished by what has occurred last evening.
Joining us now is Bloomberg's Roz Matheson. Roz, what do we know about the motivations? I mean, clearly anti-Semitic, but what drove these two killers to carry out such a gruesome act?
Well, we don't know directly from them what drove them to carry out this attack, but as the Prime Minister has said, this was deliberately targeted at the Australian Jewish community. Two people, apparently the shooters, a father and son. The father is dead and the son is in critical condition in hospital. The father came to Australia decades ago on a student visa. We don't know from what country he came. His son was an Australian-born citizen. His son, however, did come on the radar of the intelligence community in Australia back in 2019, apparently for something to do potentially with Islamic State. But the exact motivation, what made them decide to go to the iconic beach of Bondi and open fire on a very peaceful celebration for the Jewish community is unclear. But obviously, like other countries, Australia's been experiencing issues around rising anti-Semitic incidents, a big debate in Australian society about the war in Gaza, Australia choosing obviously also to recognise a Palestinian state. So it's been very much in the ether in Australia as a political issue.
How does this look set to change the political landscape in Australia, Roz?
Well, it's going to open a debate again very much around things like immigration. Australia, like other countries, has these rising far-right parties that have been pushing the debate around immigration. It's been a long-running political topic in Australia and no doubt, again, will come to the fore in terms of the debate. There'll also be a fresh debate around gun control. I mean, Australia has some of the most stringent gun control laws on the planet. They were enacted after a massacre in Tasmania decades ago, so banning automatic, most semi-automatic weapons. But gun ownership has been on the rise again in the decades in between, so those laws do need revisiting. The Australian government has said they're going to look again at how people can get their hands on guns in Australia. So there'll be a lot of conversation around immigration, around the rising anti-Semitic incidents that we've seen in Australia, and also around gun control.
All right, Roz, thanks very much. Roz Matheson there talking to us about the tragedy in Australia. Over in Berlin, meanwhile, Ukraine and the U.S. are preparing for a second day of talks on a plan to end the war with Russia. President Zelensky has signaled that Kiev could step back from its long-term goal of joining NATO if it reached bilateral security agreements with the U.S., Europe, and other states. Joining us now is Bloomberg's Oliver Crook. Oliver, walk us through these latest comments by Zelensky.
Yeah, they came as he met with Steve Witkoff and Jared Kushner yesterday in Berlin. We understand those talks will extend to today and be joined by a number of European leaders, about 10 of them, including the Secretary General of NATO, Mark Rutte, and Ursula von der Leyen, the European Commission President, all in Berlin today. But really, the sort of discussions yesterday was sort of an encouraging sign that the U.S. delegation even arrived. You'll remember going into the weekend, President Trump said he was only going to send a delegation if he thought meaningful progress could be made on the negotiations. We understand they met for about 5 hours yesterday, and that the United States said that there was a lot of progress that was made. We understand also from Zelensky that as a sort of olive branch, he might be able to and be willing to basically move back from this idea of Ukraine joining NATO that is surrendering to some degree Ukrainian sovereignty in terms of deciding who they can associate with in the interest of trying to advance the peace negotiations. The problem is, Matt, when you talk about the Article 5 guarantees, the closer you get to those guarantees, the more difficult it is going to be for the Russians to accept it. And we've just heard from Dmitry Peskov, who's one of the spokesmen from the Kremlin, I'll just quote there, saying that he's basically saying that a legally binding document preventing Ukraine from joining NATO is the cornerstone of negotiations. So, of course, the optics of NATO are critically important. It seems there is willingness to move on it. But that being said, Matt, we haven't really heard the Russian reaction to the 20-point plan as it stands today, and we still need to get that in order to realize if there is any actual meaningful progress being made here on these peace negotiations.
Oliver, there's been a lot of criticism of the European structure, not just from politicians here in the U.S., but also from Jamie Dimon recently. Who's taking the lead in terms of the European negotiations? Is Friedrich Merz stepping up for that role?
To a degree, but I think that there are the ways in which Friedrich Merz, who comes into this sort of office in Germany, the biggest economy in Europe, has sort of been a bit of a disappointment for a sort of continent that has really been looking for leadership for a long time. As you know, Matt, I think Macron really would like to have been that leader for many, many years. He obviously has far too many problems domestically to sort of embody that. I think part of the problem here in Europe is that there is not that sort of leadership. There is not that sort of momentum going forward. And Matt, really the key event for European leaders is to figure out how to fund Ukraine into the future. There's been this debate for weeks, for months, really for years, about whether or not to touch those frozen Russian assets to get that so-called reparation loans to the Ukrainian. 90 billion euros is the amount of money they're talking about. That would be 2/3 of funding for Ukraine for the next 2 years, not just for their military, but for their budget. And I've got to tell you, Matt, as of Monday, this summit is on Thursday, I think it's very difficult to see which way it's going to go, whether or not they're going to make the progress and they're actually going to get this agreement over the line. Every time they take a step forward, they seem to take 2 steps back, and that is going to be kind of one of the final potentially humiliations for European leaders who have been talking about years supporting Ukraine. When it comes to putting their money where their mouth is, I don't know if they're going to get it over the line this week, and that'll just show kind of more European impotence on the geopolitical stage, which there's been no shortage of this whole year.
All right, Oliver, thanks very much for joining us. Oliver Crook there from Europe with the latest. Now let's get to our top stories trending this morning. China's economy shows further softness in November. It posted the weakest retail sales growth since COVID. Investment and factory output also missed the mark, while housing prices continue to slump. iRobot, as Valerie mentioned, that company that revolutionized robot vacuum cleaners in the early 2000s with Roomba, has filed for bankruptcy. It will be taken over by its main Chinese supplier. iRobot's earnings began to decline in the post-COVID era due to supply chain issues and much cheaper competitors, despite having sold more than 40 million home robots. And National Economic Council head and the frontrunner in the race to be the next Fed chair, Kevin Hassett, has said that President Trump can offer Fed advice, but will not set its action.
I think he has very strong and well-founded views about what we ought to do. But in the end, the job of the Fed is to be independent and to work with the group of people that are on the Board of Governors at the FOMC to drive a group consensus on where interest rates should be, and to do so, basically with the guidance of the Fed chair. But in the end, it's a committee that votes.
Coming up, we'll look ahead to the week full of economic data and rate decisions with Jane Foley of Rabobank. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York for Bonnie Quinn. A busy week ahead in markets with the delayed payrolls data coming on Tuesday, then rate decisions from the ECB and the BOE, plus U.S. CPI on Thursday, and then the BOJ decision on Friday. So a ton of central bank news this week. Joining us now is Jane Foley. She's head of FX strategy at Rabobank. Jane, where do you put your focus? I mean, the U.S. data doesn't seem to be as important since the Fed already met and cut last week. Which of the other central banks are you looking at as the key decision maker this week?
Well, I suppose it's got to be the Bank of England and the Bank of Japan, although we've got to remember there's also the Norges Bank, there's the Riksbank too, and they will be important in their own way, not because the market is expecting any change in policy, this time around, a bit like the ECB, but there is the speculation that they could go during 2026. And the Norges Bank is just one of those three central banks now, the Fed, the Bank of England, and the Norges Bank, that the market's expecting to cut rates again. But, everybody else, all of the other G10 central banks, according to market pricing, could be hiking in 2026. And that's what makes central banks, right now, really very interesting.
Here in the U.S., Jane, the labor market seems to be the bigger worry, even though inflation is still 50% above the Fed's target. It doesn't seem to matter as much. Is that not a concern for the rest of the world? Are labor markets not an issue elsewhere?
Well, I mean, they are. I mean, for instance, you could look at the UK, and certainly there is a decline in employment in the UK too, and that is a concern. But, there is a structural versus cyclical element to this, both in the UK and in the US. And yes, there is a cyclical downturn here, and the data, really do prove that. But if we stand back and look at the demographics and maybe, in the US, the immigration impact too, the demographics suggest that, in the next few years, we are going to have less labor supply because of the aging population. And we've got to look at that in the context too. So, a cyclical slowdown, when you've got the structural issues going on, will have slightly different ramifications on inflation than if it was otherwise the case. So that gives us some context as well.
What do you expect from rates? I read a Bloomberg opinion piece by Edward Harrison last week in which he argued that all of these other central banks raising rates and raising their benchmark rates and Treasury rates around the world rising would drag the U.S. 10-year higher as well. And we haven't seen it come down even as the Fed has cut 125 basis points.
Yeah, I think that this is going to be a theme going into the new year, really fiscal issues more generally. So, for instance, if we look at some of the best performing G10 currencies this year, we see, the Swiss, we see the Swedish krona, right up there. The Norwegian krona is pretty high up there too. And, these are central banks, or these are countries, I should say, that have pretty well managed fiscal situations, low levels of debt, for instance, really good levels of budget deficits. And, it does make you wonder whether or not, some investors are diversifying into currencies that have strong fiscal positions, and whether or not that's going to become more of a trend next year, and whether or not that will impact, for instance, the US, but also Japan, because whilst the yen is generally a safe haven currency, that is a currency that hasn't done at all well this year, despite that safe haven reputation, and that's probably related to its poor fiscal position.
If I look at on WCRS, the world currency ranker on the Bloomberg terminal, all of the majors, you mentioned the krona or the multiple kronen, they've all done better than the dollar. All of the majors have outperformed the dollar this year to date. And even if I expand that only, Argentina, Turkey, and India have done worse. So does this dollar weakness look set to continue?
Well, that is the consensus, but there is a slightly different perspective here, because if you put in half year to date into that page on Bloomberg, the dollar's actually been performing relatively well. I mean, it's not the best performer right now, but it has been in recent weeks. It has been at the top of that table. So from that point of view, we have got a slightly different impact coming through from the dollar since the summer. All of that decline really was registered in the first part of the year. And that's pretty interesting because obviously, we've seen the AI trade again gain momentum in the second half of the year, really since June. That's perhaps helped give the dollar, a better poise, but also the fact that, whilst there has been disruption from Trump's tariff policies, not as much as the market feared at the start of the year. So from that point of view, the dollar really has settled down, and you could take that and argue that, actually, all of these market consensus for a weaker dollar in 2026, maybe that should be moderated if, again, we get perhaps a US economy maybe even outperforming market expectations.
Jane, getting away from the U.S. dollar, what are the other most important pairs that you're watching?
Well, I mean, clearly, euro dollar, dollar yen. I mean, cable's been interesting. It's been really sticky. The pound has sort of held up above that 130 level really quite well. But, I do think that for 2026, the dollar yen could be perhaps the most exciting currency pair out there. The yen is extremely, extremely cheap. And it's quite possible that with other central banks potentially hiking interest rates by the end of next year, maybe the Bank of Japan has to accelerate the pace of its interest rate hike. So an interesting currency pair indeed.
All right, Jane, great to get some time with you. Thanks so much for joining us. Jane Foley there of Rabobank talking us through some of the currency action and, of course, so much coming up this week in terms of economic data here in the U.S., but also central bank decisions around the world after a week that was dominated by the Fed. We'll be focused in on the Bank of England and the Bank of Japan, among others. In terms of what's going on today in futures, we're seeing a little bit of a rebound from the brutal close that we had here on Friday. We were down on the S&P 500 on Friday more than 1% to 68.27. Of course, we had just hit an all-time high, closing high of more than 6,900 last week. Looks like we're going to recover a little bit of what we lost on Friday. You can see the dollar right now at 12.05, so just down 1/10 of 1%. As Jane mentioned, it was really the first half of the year that the dollar had its real weakness. And then the 10-year yield right now at 4.1665. And this is fascinating because over the last year and a couple of months, the Fed has cut 125 basis points, and yet the 10-year yield remains exactly where it was from that time in, say, October of 2024. Coming up, the Australian Prime Minister vows to strengthen gun laws following the Bondi Beach mass shooting. That and a look at what else is making your headlines in front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York City, in for Vonnie Quinn. Time for your front page news. First up on the New York Times, Australian police say they plan to charge the surviving suspect in the shooting on Bondi Beach that killed at least 15 people at a Hanukkah celebration. It's the worst terrorist attack in Australia's history. Next up on the Washington Post, in the U.S., police have released a person of interest after a shooting at Brown University. At least 2 people were killed and 9 were wounded. All students have been sent home and final exams have been called off. The shooting took place in a classroom in the engineering building at the Providence, Rhode Island campus on Saturday. And on the Wall Street Journal, famed Hollywood director and actor Rob Reiner and his wife, Michelle Singer Reiner, have been found dead in their Los Angeles home. Authorities are investigating the incident as a homicide after police and firefighters were called to the couple's house on a Sunday afternoon. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Australia calls for tougher gun laws after gunmen opened fire and killed at least 15 people at a Jewish community gathering to celebrate Hanukkah. A busy week ahead here in the U.S. Delayed November jobs data and rate decisions around the world from the ECB, the BOJ, and the BOE, among others. And don't miss our exclusive interview with EU Trade Commissioner Maros Sefcovic. In terms of what's going on in the U.S. Markets after a drop of more than 1% to close Friday's trade, S&P futures are back up about 0.5%, NASDAQ futures as well. The small caps gaining even more. For a look at some of the individual stocks to watch, let's get over to Valerie Teitel in London. Valerie?
Good morning, Matt. Let's start with a check on the Mag 7. NVIDIA leading the gains this morning as tech is on a more solid footing to start this Monday session. NVIDIA up over 1%. It was one of the biggest drags on the NASDAQ on Friday. It was down over 3%. So still a lot of room to be made up to catch up to Friday's weakness. But we do feel like we're on a firmer footing with the wider Mag 7s this morning. Staying with the tech trade, let's have a check on Intel. After Friday, it was reported that they are looking at an acquisition of SambaNova, an AI chip startup based out in Silicon Valley, for around $1.6 billion. Matt, we're seeing shares of Intel rise on the back of this news, up 1.2%. This acquisition of SambaNova really helped Intel increase and widen its AI product offerings. And lastly, let's check on the Roomba maker iRobot filing for Chapter 11 bankruptcy. The share is down 82% in pre-market trade. This is the company that's revolutionized the robot vacuum, but they have hit a lot of problems since COVID, that being of supply chain issues and steeper competition. It will be taken private by its main Chinese supplier. So iRobot down 82% after declaring Chapter 11 bankruptcy. Matt?
All right, Valerie, thanks very much for that. Now, a week packed with data and rate decisions, starting with the delayed November payrolls report on Tuesday, U.S. CPI and rate decisions from the ECB and the BOE on Wednesday. Then we get the Bank of Japan on Friday. Joining us now is Bloomberg's Enda Curran to talk about, I guess, everything. And let's start with the labor numbers here in the U.S. First of all, what do we expect, and how important are these numbers considering the fact that the Fed has already cut?
So, yes, we're getting official jobs data for the first time in some time, Matt. As you mentioned, we will get November jobs data this week. We're expecting a gain of around 50,000 in the month, the unemployment rate creeping up to 4.5%. We're also going to get an estimate for October, not the unemployment rate, but an estimate for the payroll side of things there. So on paper, it suggests, yes, we're going to get official employment data again. That's a very good thing to give us an indication as where the economy is at. But this data, of course, because of the government shutdown, is expected to continue to have some survey and quality issues that will take many months to be ironed out. And the Fed chair, Jerome Powell himself, made that point last week. So the best we can take out of tomorrow's data will be some indication as to which direction the labor data is headed in. And it's expected to be a confirmation that it's not falling off a cliff, but has been softening, Matt.
Well, I wonder, what the Fed thinks about inflation, which has not been softening. You know, it remains 50% above the target that they have failed to hit. Will they continue to cut regardless?
Well, we also get inflation data on this week on Thursday. Again, that's going to be partial. There won't be month-on-month comparisons because of the shutdown that really impacted October in particular. But nonetheless, it will give us some suggestion as to what's going on with headline CPI. And we've had core PCE again remaining above target, like you mentioned. The Fed's own forecast last week suggests that they see PCE coming back to target in the years ahead. That's certainly what they are clinging to. But there's no doubt, I think the real pressure point on the inflation story will come in early next year in the US. But it's either going to be somewhat of a benign path, tariffs are a one-off price impact, as the Fed and others suggest, that we start to see a decrease in shelter costs, in rental costs, for example, and we see inflation heading in the correct direction towards target. Or if not, in the first half of next year, we'll soon start to get warnings. Maybe tariffs aren't a one-off. Maybe there are other pockets of prices like services that are sticky. So the inflation story has not yet gone away, and it feels like we're at a critical junction now in terms of what exactly is happening to the jobs market, what is going on with inflation. And I think the months ahead are going to start to show some clarity on that.
We have so many central bank decisions coming out this weekend, and Jane Foley from Rabobank earlier was saying, you know, a few, maybe the BOE, we could see a cut, but at others, we could start seeing central banks raising rates, and we haven't really had, you know, a dip in longer treasuries. I mean, we're still at 4.20 essentially. What do you expect from these other central banks, and could we see, you know, the treasury rate continue to get pulled up with other global interest rates?
Well, the Bank of Japan is at least expected to hike in some quarters. I mean, they've been battling the inflation story. Some would argue they're behind the curve, so they seem to be in a different space. Everybody else, I think, it was interesting last week, Matt, seeing pricing around the world for advanced central banks, so your ECBs and Bank of England and so on. Markets are now, and Australia's RBA, markets are nudging towards the next move could be a hike for some of these. Now, remember, that doesn't say when the next move might happen, just that perhaps they've finished their easing cycle or about to finish their easing cycle in the case of some, and then go on hold for a while, and then perhaps the next move might be up. But that's a long way away for now. We do know that Fed Chair Jerome Powell was asked last week what's his view on that, and he said that right here, right now, no one's base case at the Fed is for tightening. And again, it goes back to what we discussed a bit earlier, Matt. So much depends on where the inflation story heads next year. And if we see the inflation story coming off the boil, central banks have plenty of room. If not, then it might be a different policy story in the middle towards second half of next year.
And I got to ask you about the Chinese economy. You spent so many years studying that market. A shocking chart on the terminal this morning as retail sales hit the lowest level since COVID, and even going back previously, we haven't seen retail sales growth this week, at least, you know, in this time period. What do you make of that?
I think a lot of it still reflects the real estate slowdown, Matt. It hasn't turned around. That's being weighing on confidence. And we know that, you know, the real estate sector accounted for 25% of the economy. And until that's fixed, a lot of people will tell you consumers aren't meeting their potential in China. But, you know, let's not forget that's one part of the economy. We did have data last week saying China's export surplus breached the $1 trillion mark. And we know that the manufacturing and export sector in China is going gangbusters, along with the tech sector. So you have some analysts making the point that there are, you know, there's a multi-speed Chinese economy going on right now. You can look at whichever part that you want. Consumers may be subdued, not meeting potential. Real estate sector continuing to be sluggish. House prices under pressure. But manufacturing and exports and EVs and quantum and high tech and those other sectors are growing gangbusters. And that's where the activity and the excitement and energy is in China's economy right now.
Yeah, that's fascinating because it comes despite the Trump tariffs as we get closer to the end of the year. And how do you see those tariffs playing out in terms of the manufacturing distribution? Because the president, I think, wanted to reduce the amount of exports we buy from China and bring manufacturing back to these U.S. shores. Is that happening?
Well, it's tricky to gauge. Number one, we're very early in this process in terms of this trade shock, so to speak. But a lot of manufacturers will tell you, Matt, it's not as simple as moving up sticks overnight, pulling out of China and bringing back to the US. It's more expensive here. Clearly, there are investment commitments on the table. The White House touts them every other week. My own colleagues did an analysis on just exactly how much investment commitments are on the table. And clearly, that number falls far short of what the president is saying. But we know some things near term. We know that both importers and customers are complaining that prices are going higher, and that's linked to tariffs. We know that supply lines around the world are shifting, but it's not all necessarily pulling out of China, because right here, right now, some of that tariff differential play just makes it easier to stay in China, because why would you move to other countries, given tariffs have also gone up there as well? So it's not a binary story, Matt. It's not a simple story. There are changes afoot, but it will take several years for it to become clearer to see just exactly these tariffs have impacted manufacturing and where it is located.
Got it. Really appreciate you joining us this early, and Bloomberg's Enda Curran joining us there out of Washington, D.C. Now to the other top stories trending on the Bloomberg terminal this morning. Ukraine and the U.S. are due to hold a second day of talks in Berlin on a plan aimed at ending Russia's war. Allied security guarantees for Kiev is a central focus of the negotiations. About 10 European leaders are also expected to attend a summit on Monday, together with NATO Secretary General Mark Rutte and European Commission President Ursula von der Leyen. iRobot, the company that revolutionized robot vacuum cleaners in the early 2000s with the Roomba, has filed for bankruptcy. It will be taken over by its main Chinese supplier. iRobot's earnings began to flag in the post-COVID era due to supply chain issues and cheaper competition, despite having sold more than 40 million home robots. And Alphabet is set to book another sizable paper gain after SpaceX completes a tender offer that effectively values the closely held company at about $800 billion. SpaceX's insider share sale was priced at $421 a share, which would mark a sharp jump in valuation from earlier secondary transactions. That is likely to lift the carrying value of Google's longstanding investment in Elon Musk's rocket and satellite company. Coming up, an exclusive interview with the EU Trade Commissioner as talks continue with the U.S. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in for Vonnie Quinn in New York City. Let's get right to our exclusive interview with the EU Trade Commissioner as talks with the U.S. continue. Bloomberg's Oliver Crook joins us now from Brussels. Ollie?
Yeah, that's right, Matt. Thanks so much. Yeah, we're here joined by Maros Sefcovic, who is the Trade Commissioner for the European Union. We have so much to talk about the relationship with the United States, China, Mercosur, this Latin American trade deal that's supposed to be signed this weekend. We'll see if we get to that. Commissioner, thank you so much for joining us here. I'd like to begin with the negotiations with the United States, because I think a lot of people are not very clear on where we are, particularly on the negotiations for steel and aluminum, those 50% tariffs. What progress has been made? Where are we right now?
I was very pleased with the outcome of the visit of my two principal counterparts, Secretary Latnik and Ambassador Greer. And I think we kind of reconfirm also in front of our industry, because we had a meeting with CEOs, that if it comes to steel and steel products, we are not each other problem, because we export to each other really minimum amounts. But what unites us is that we really need to take care of overcapacities which are destroying the steel production in US, but also in the EU. And I explain again that we adopted these very far-reaching safeguards if it comes to the imports of steel from the third countries to the EU, which are kind of very much reflecting the measures which US has undertaken several months ago. And therefore, I suggested again, let's go back to the idea where we can kind of build this ring of friends, where we would trade on MFN, on or zero levels, and we would have the same, let's say, measures to take on the global overcapacities. The situation as it stays right now is that I sent to Secretary Latnik the list of the codes where we believe that we can definitely lower the tariffs. I understand there is some interest, especially from the machinery sector, but we didn't proceed or haven't proceeded yet to the very concrete negotiations on this type. So we're talking on the level of teams. We are almost, I would say, in permanent contact with my counterparts, and I think this would be good for both sides, because if America wants to reindustrialize, they need machines. We produce the machines. We are ready to send them the machines, but of course we need to find a solution on the derivatives.
And when Secretary Lutnick was here, we caught up with him. He came on Bloomberg Television, and he said that basically in order to make progress on steel and aluminum, there needs to be movement on regulations for digital industries. So basically stuff that's outside of trade that the United States considers non-trade barriers or non-tariff barriers within. Is that something that is on the table in terms of the negotiation? Could that be part of a framework? And is there any other avenue to get those tariffs down other than basically diminishing European tech regulation?
I think that our tech regulation is adopted democratically by us through very thorough legislative process. And therefore, we are, of course, going to protect our tech sovereignty. What I heard from Secretary Lutnick and Ambassador Greer was that they wanted to be treated fairly. So we had a lot of discussions. Are we aiming only at the U.S. companies? Clear answer is no. Just look at the companies which we are investigating or eventually fining. And are we kind of, favoring the European companies in this case? Again, no. And I was just providing my both counterparts with the fact that a lot of these investigations are actually prompted by the complaints which are coming from American companies, which are also located here in the EU. They want to make sure that U.S. companies are treated fairly, in non-discriminatory manner. When we would use more I would say, the possibility of the settlement than fines, and all these things been also discussed with American partners, also by my colleagues who are responsible for these sectors.
And speaking of sort of rare earth minerals, this obviously has been thrust into the sort of the conversation in a very sort of obvious way now by China. Are we getting closer? Is Europe getting closer to getting a general license from China as the United States has?
Yes, I think that there I can say that we are in very close contacts with Foreign Trade Minister Wang Wentao and also his team. So we are communicating on different levels. We had here the team from China specializing on export controls like a couple of weeks ago. And I think we are getting initial reports from our industry that they are getting these general licenses, but we need to have a little bit more granular information to evaluate the whole process. But the fact that this idea was favorably received, that it seems that we are getting first general licenses, and also that the Chinese side was receptive to our arguments that the process as it was set up in April required too much of I would say, very intrusive information, too many photographs, too much detail about the supply chains, and I think that the general licensing could be one of the solutions how to address this issue.
Does that mean that there's going to be a regime that governs this sort of issue between the EU and China, or is it still just kind of being hopeful that things don't change, basically?
I think that we kind of set up I would say kind of hotline with the Minister Wang Wentao for, I would say, priority cases. So we are talking on our level quite regularly, but especially our teams are in permanent contacts, because indeed we had moments over the last year where on my table I saw that pile of the letters from the worried CEOs of different new companies about the lack of permanent magnets, lack of legacy chips, and so on and so forth. Was really growing quite rapidly, and we needed to address it. So now I think that we set up the good channels on working level and political level to address this issue. But it's a challenge. It brings additional instability into how the global supply chain has been working, and therefore my message to the European industry is you have to be prepared to pay security premium. We have to stockpile, we have to diversify, because we learned the hard way how the dependencies are costly, and therefore we included it into this new look, new communication on economic security, because we just simply have to be much better in managing these emergencies.
And one of the costs of imbalance and the sort of dependencies is sort of evident in the trade balance with China, and something that Emmanuel Macron has been very critical of, particularly in the last week or so after his visit to Beijing, saying that there should be a more aggressive approach to dealing with the oversupply that is going into Europe. Do you think there is appetite to deal more aggressively with this question from China? And do you think that the trade deficit with China specifically should be targeted by the EU, and that is something that they should be looking to close?
Clearly, I would say the deficit of 300 billion is way too high. This was the topic which was raised by me with my counterparts from the moment one when I first time came for the visit to China. And I think that there's also a very clear message from our side that we will fight tooth and nail for European jobs and European companies, and to have the deficit of 300 billion on a permanent basis is unsustainable. Yeah. So we are looking at different possibilities how to address this issue. Maybe one interesting information for you would be that we set up such as import surveillance task force, which are monitoring, I would say, the inflows of the goods on bi-weekly basis, and this is what constitutes, I would say, the basis for our next steps.
And if 350 billion is too high, what for you is a more reasonable figure? What is a kind of goal, since we can talk concretely about kind of what we should be aiming for? And is the anti-coercion device, for example, something that is on the table in trying to achieve that goal?
I think that before we went to, I would say, the most, I would say, to the strongest instrument in our arsenal. What would be very important for us would be to see the tendencies. Are the European companies in China treated fairly? Do we have access, to some of the programs and public procurement? How the issue of the handling of overcapacity is happening, and if the investments are done in the EU, are they really investment? Are we talking about the IPR transfer? Are we talking about creating real value added in Europe? Are we talking about creation of the real job? So what would be very important is the tendency, and I would say engagement with us to address these, I would say, issues which we are raising with our Chinese counterparts really already for quite some time.
And it seemed going into sort of at the end of last week or in the middle of last week that Mercosur was more or less a done deal. There now appears to be some question about that. What do you think are the chances that Mercosur goes into effect, that it is signed this weekend?
They're going to use every minute of this week to get it done, because I think to end this turbulent year from the perspective of such a global trader like European Union, with the biggest free trade agreement ever signed, I think would be a positive conclusion to this year. That's a big deal with lots of opportunities for not only European exporters, but also in the field of critical raw minerals accessibility, and I'm sure that in the end it would be a very positive deal also for our agri-food industry, which is paying very high tariffs if they try to export anything to Mercosur. So we really very diligently listen to our farmers community, and I believe that we found the responses to every single concern they have. I just hope that they will look at it carefully. We are ready to explain it. We are discussing it with our member states in the parliament, and I hope that we'll end up on the positive note.
And just very quickly, after 25 years of negotiation, which is how long this has sort of been going place, if we do not get it over the line in these next couple of weeks, can we consider this sort of initiative to be dead?
Let's think positive, and I would never accept such a good deal like we negotiated between Mercosur and European Union is dead, because it's just simply too good for our citizens and too good for our businesses.
Well, Maros Sefcovic, thank you so much for your time. And on that note, I'll bring it back to you, Matt, in New York.
All right, Oliver, thanks very much. Oliver Crook there with that exclusive interview out of Brussels. Let's get a look now at what's ahead this week in the U.S. The November jobs report will be released on Tuesday after being delayed due to government shutdown. Around the world, the ECB and the BOE will announce their rate decisions on Thursday. And then in Japan, the BOJ comes out on Friday. In terms of individual movers that we're watching today, Intel said to be near a $1.6 billion deal for Samba Nova, a chip firm that it works closely with already. ServiceNow is said to near up to a $7 billion deal for Armis, and Texas Instruments has been cut to sell over at Goldman Sachs. The price target there, $156. In terms of what's going on with futures, after a more than 1% drop at the end of the session on Friday, we look to kick off Monday's session with gains, 0.5% rise on S&P and NASDAQ futures, about 0.75% gain for the small caps. In terms of treasuries right now, we're looking at a 10-year yield at 4.1665. All yields there coming down just about 1 or 2 basis points. That's it for Bloomberg Brief. Bloomberg Surveillance is up next. Have a fantastic Monday morning. This is Bloomberg.